Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 17th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. We do have some economic data today, despite it being a light week. Across the pond in Great Britain, we got CPI year over year came in at 0.4%, was expected to be 1.2%. They did, that was the PPI output, came in at 0.4%, expected to be 1.2%, and revised last month's number up quite dramatically from 1.6% to 2.3%. So that was for the PPI input. Then CPI year over year came in line with expectations at 3%. And then core CPI year over year came in line at 2.7%. Great Britain's PPI output came in at the expected 0.2%. Then here in the United States, we got our importer price index came in at 0.7%. That's month over month. Capacity utilization came in at 76%, in line for the most part at what was expected as 76.2%. And then last month's number was revised down from 76.1% to 75.8%. So a little bit of a pullback on capacity utilization. Industrial production came in at 0.3%, in line with what was expected, and revised last month's number up from a negative 0.9%, which, if you remember, was a bit of a surprise, to negative 0.7%. So still not close to in line with what they were originally expecting for that number. But that, remember, had to do with some of the hurricanes and things of that nature that we saw. And then the National Association of Home Builder Index came in at 68, was expected to be 64. So that index rising quite nicely. And then we also have Harker speaking, who is a Fed governor, later on today. Also, what else was I going to say? On the overall markets, I'll talk about that in a minute. We got crude oil futures off on the day by about 21 cents, but above this Fibonacci level that I've been talking so much about. I figured it was going to bounce in and around this value area high, fill in this gap here, which seems to be coming to fruition. For me, I'd like to see crude oil stay above this area right now for my longs in XOP. So it is working out in my favor as of right now. Gold futures, I've been talking about this being overdone to the upside. I never could find a good trade in that particular precious metal. I looked at GLD, the GDXJ, things of that nature. Couldn't really find any good trades that really fit with my rules, so I just stayed away from it, unfortunately. But they got the directionality. It just didn't fit with my rules for the most part, with either high volatility or even low volatility. It has really low implied volatility right now, but it still just didn't work out very nicely for me. So, but crude oil coming down and testing that $1,300 a barrel, or $1,300 a troy ounce area that I talked about, and breaking through that. So now on to test this 1280 mark that it's got. So I could easily see it kind of pushing through that and coming back down to the value area. That's where I think it's probably best priced anyway. And we got bonds up on the day, albeit only slightly, by about 9 ticks right now. Doesn't really have a whole lot of room to go unless people start seeing a bit of fear in the overall equities. That would be the only reason to really push bonds higher, as people have a flight to safety in a sense. But then you're going to also see gold futures kind of push higher. Looking at the VIX, we can see it's back up in the double digits with a 10 handle again. We're seeing this because I'm just seeing a bit of kink in the armor of the overall equities, although the Dow Jones making a new all-time intraday high. Actually, even yesterday had a settle of a new all-time high. It's just starting to look like it's feeling a little toppy for me. Dow Jones could, you know, be the one that's the benefactor of maybe the Nasdaq or the E-mini S&Ps having a slight correction, but at the end of the day, they're just all looking a little toppy to me. This is the Nasdaq also with the new all-time intraday high as of right now, even though we're negative on the day. So we got a mixed bag, as you can see, happening here with the equities. The Dow's up, Nasdaq's down, E-mini S&P down. It hasn't created that new intraday high or even a all-time high settlement as we're off on the day. But this is what I'm talking about with it's just feeling a little bit like people aren't throwing a lot of money at this market at these all-time highs. As you can see down here, even the the volumes numbers are really low in comparison to historical areas. So people just kind of waiting on the sidelines, and when you don't see all that volume coming in here, it means price really isn't being accepted at these levels. People aren't throwing money at it, which has a tendency to me to make it feel like it's getting ready to roll over a little bit. And anytime you get this really tight range bound areas, it's because there's not a lot of people trading it in a sense, and we're starting to see it kind of wane a little bit. So the overall market pushing to the downside and close to the lows of the day as of right now. As for my trading going on right now, I'm kind of holding off on a lot of trades because I'm looking at doing the earnings, and the earnings are right upon us. We basically have U.S. Bank Corp coming out with earnings before the open tomorrow, but then after the open or after the close tomorrow's session, we're getting a lot of these early earnings announcements. We basically have with eBay coming out, we have American Express coming out, and a couple of other ones that I can't think of right off the top of my head. But so earnings upon us, and I'm going to save my margin for those trades there. So I'm not going to start adding a bunch of trades right now. One thing I did want to talk about is this Adobe trade. If you guys remember, I put on Adobe only a few days ago, and what I did was the December and bought the 160 puts and sold the 145 puts to finance that. I got a really good deal on it, paid less than $7, which is a lot less than 50% the width of those strikes, which is kind of my rule over under on that. You want to be below that, and I paid like $6.90. Now that's trading right now around just over $8, so I'm up about $1 on those trades, about $1.25-ish. It was a lot better today. I was up basically $2 on that trade, or close to not $2, but close to $2, I guess. So that isn't in line with my rules for that, because 50% of my max profit would be $4 added on to that $7 that I made. So getting out at around 11, it was trading right around 9. So, but it only has been 2 days for that trade. So anytime it kind of bucks that trend and happens right away, I have a tendency to pull the trigger on it a little soon. So it still looks pretty bearish. I think that it's going to come down here and test this value area high and maybe support there. So just keep your eyes on that. If it goes down there and touches that value area high either today or tomorrow, and I don't think it's going to happen today, it's kind of nice comeback today, which is a little discerning as well. As you can see, we're almost unchanged. It was down almost $2 on the day. The low of the day was trading 148.15, so $2 lower than we are now. So that kind of comeback is a little discerning. So I might be itchy on the trigger finger for that one. I don't want to see tomorrow it coming up and confirming that there is a bounce here. So keeping a real close eye on that one as well. So as you should too, because anytime you get those real quick winners like that, you might as well take your money and run. And that's what I'm thinking about doing as well. So that's about all I got for you guys today. Friday's webinar is going to be on the call calendar, and I'm going to talk about all the rules in and around that. It's a great one for once we're starting to see the earnings kind of roll out. We get really low implied volatility and probably the lowest volatility aspect of the month, and that's when you want to start setting up these strategies, and I'm going to show you how to set that up to increase your probabilities of success. So go to protraderstrategies.com and sign up for that, and if you can't take that, take it easy.